Welcome to another video. If you're new to the channel, I'm a top author on the TRADINGVIEW platform, as well as running an educational program and swing trading full-time with my students. In this video, we will be speaking about how you're actually supposed to be approaching your trading from a multi-time frame and order flow perspective. We will be taking a pair, making a multi-time frame analysis, breakdown on it, covering exactly what hedge funds are doing from a COT perspective, so commitment of traders, as well as seeing how we can use pattern and obviously multi-time frame analysis to identify the direction and capitalize on the next moves. So the video will be very educational and I suggest you to watch it until the end. So on EURUSD, we have a very interesting situation from a monthly perspective, as we will now see going deep in the charts. Plus, we have a very nice situation going on the Euro USD, which is obviously a thing that definitely we have to look up if we want to trade EURUSD. Why? Because the positions that you see reported in the COT report, so the order flow of hedge funds, what are they showing? They're showing, as we will now see in the video, that basically on the euro there haven't been any kind of shorts added in this move to the downside, meaning that overall we can definitely expect some accumulation phase here at the bottom of EURUSD, for which we already expected the market to make a push to the upside, which should drive also some buying pressure on EURCHF, rejecting the monthly zone that I will now show you. Okay, so what is the situation on EURCHF from a multi-time frame analysis perspective? Then we will also check the order flow and see how we can capitalize on the next moves on EURCHF and where are the best probabilities. So let's start from the monthly time frame. Okay, what is the situation from a monthly perspective on EURCHF? Well, clearly what we can see that the market had approached this very strong support zone. We know that the market from here started all of this push to the upside, and now that the market has approached exactly the same area, we definitely expected to see some deceleration approaching it, possibly for a push to the upside. Okay, it would have been great to see the market actually make a push to the upside from this area. However, as usual, trading is reactive, not predictive. The market never shown any kind of bullishness on lower time frames, nor giving us any kind of opportunity to actually take a long from a lower time frame perspective. So the market has just broken to the downside zone, and we have to adjust to this new change in the market structure, and that is exactly what we will be doing. So what we also know from a monthly perspective, the market created an impulse, a retracement, and another impulse. At some point, the market will create another retracement. That is how the market moves, right? Impulse, correction, impulse, correction, impulse, correction. Always having retracements along the way, and that is the key to swing trading, because we can use those retracements to actually take very high probability and high risk to reward trades, right? Now, let's go down on the weekly time frame and see what kind of situation we have from a weekly perspective. Now, on the weekly time frame, we clearly knew that we did have some resistance at this area, right? We clearly knew it. We have clear previous support here, Norton resistance, and the market obviously did respect it with this rejection to the downside. First break, retest with this green candle, again a minor retest, and then push to the downside. Now, if we go on the daily time frame and see what is the situation from a daily time frame perspective, if we remember what we spoke about on TradingView was possibly to be monitoring for a possible long opportunity around this area. If on the 4-hour time frame we would have seen some kind of bullishness. However, as you know, on the 4-hour time frame, everything remained bearish. This counter trend line never broke to the upside, so obviously there was no opportunity to be looking for a possible long opportunity for a push to the upside. So we have to adjust to this new market structure. Now, at the moment, since the market is below this structure, obviously previous support here, which is now to resistance, can we be looking for a possible long opportunity? No, right? We can't, until we will see the market clearly break back above this area, and then at that point we would have a very high probability entry situation for the upside that would bring at a fake breakout from a monthly perspective. But as we are speaking, since the market is below, we have to basically analyze with what we have, not what we think the market will do. We have to trade what we see, not what we think the market should do. Just a quick reminder, make sure you comment below and you let me know which pairs you would like me to cover in the next video. So can we be looking for a possible short position? No, because the market currently had very strong support here, and we have again supported this area. So until the market remains inside of these two areas, there is no pattern and the market is stuck. So there are no good probabilities nor good risk to reward inside of this area. And as you know, trading is all about probabilities and risk to reward. So we have to stay on the sidelines until the market will remain inside of here. But given the price action that we currently have, okay, where is basically a good opportunity to be looking for a possible position, okay? Because I want to tell you where we have opportunity to actually capitalize on a move on EURUSD. Now, since everything at the moment is pushing to the downside, we could definitely see the market break everything to the downside. Now, if the market will break everything to the downside, let's first of all go and see what we have from a COT perspective, okay? Let's go and see what we have from a euro perspective. On the euro, we can see that overall net positions went from minus 114,000 all the way up to 61,000 net positions with a lot of shorts closing. So basically, during the push to the downside on the euro, hedge funds were closing up their short positions. So what did it mean? It means that they want to buy from lower, right? And that is exactly what we have seen with EURUSD with this recent push to the upside. And what we look for from a CHF perspective is that CHF still looks quite bullish with net positions reaching 5K. But what we can see with the last report is that longs have been closed. Now, obviously, we have the new data coming out today, which obviously will help us in determine what we can expect next and which are the best probabilities for this pair. But what we can see is that with the last report, they closed 3.6K longs, meaning they're not really interested in the long anymore, which means that we could start to see some bearishness on the CHF in the long term. So that brings me back to the situation here on EURCHF, because if the market will actually give us this push to the downside, then what we will have? Let's start from a pattern perspective. What kind of pattern we will have? We will have a market that will have created an overextended M formation to the downside. Now, after an overextended M formation to the downside, what do you expect? You expect to basically see the market make a push back to the upside to the neckline. That is where the completion of the pattern is, right? The previous support now turned resistance. After you see an overextended M formation, you want to see the market reach back to the neckline, which is definitely something that has high probability of happening, specifically because from a monthly perspective, as we said, we want to see a retracement. We want to see the market start a push to the upside. So this brings us to a very simple conclusion, because from a euro perspective, we can expect some strength. From a CHF perspective, if today's report will basically confirm it, we can expect some weakness, which should bring EURCHF to make a push to the upside. So if the market will make a push to the downside, the technicals align perfectly with the positioning of hedge funds and what we will be doing with students. We will be monitoring price action on the 4-hour time frame inside of this area. And when the market will shift from a bearish market to a bullish market, then what we will be doing? We will be taking a nice long with a good risk to reward and good probabilities at this point for a push to the upside. On the other side, if obviously the market will just continue to push to the downside and we will see no confirmations on the 4 hours and our rules not satisfied, then obviously we have to adapt to the new market structure, because as usual, trading is reactive, not predictive. You can't predict the market, but you can react to what the market is showing you and position yourself with the best probabilities and best risk to reward. So in this particular situation, that is exactly what we will be doing with students. If the market will make the push to the downside, then we will be monitoring inside of here for this possible push to the upside. The second option is obviously that from here, the market breaks this zone back to the upside. That is very good. It's probably even better. Why? Because at that point, what do we have? We have the possibility to create this inverted head and shoulders, left shoulder, head, and right shoulder. And from here, we will be doing the exact same thing that we would have been doing basically from here. So basically waiting on the 4-hour time frame for one of our valid entries with students. And if the market does provide one of our valid entries, then what we will be doing? We will be taking a nice long with very good probabilities and very good risk to reward for the start of the next retracement from a monthly perspective. So basically a nice push to the upside on the daily time frame, and obviously on the 4-hour time frame we will find an entry with a high risk to reward, at least 1 to 3, which is what I suggest you to also be always targeting, okay? Having at least a 1 to 3 risk to reward when you're trading, because if you do have at least a 1, 2, 3, you can be right only 3 times out of 10 and you're still in profit. So even if you have a losing streak, you will still make money in the long term. That is exactly what many people don't get when they first get into trading and don't understand that it's all about probabilities and risk to reward, and obviously having a system that is tested and that you know exactly how it performs. So all the statistical data for that strategy. And I also made a video about back testing in my last video, so I also suggest you to go and check that one out. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more education and analysis for all of you, because obviously it helps with the YouTube algorithm, as well as going and checking out the mentorship program. You find the link in the description. You first get all the rules of my strategies and then you trade them with me. Each and every day I give you a new daily market breakdown showing you the exact entries, stops, take profits, as well as answering every question that you have each and every day. So it's a really very complete and valuable program, and I will invite you to go and check it out, or go and check out the next video.